What's up, everyone? It's Caddy with Money Vesting. Welcome on board for our inflation live stream. We are ready to rock here in under 30 minutes. We now have a CPI coming out for the US. So that's going to be for the month of December. If you guys can hear me and see me, just give me a thumbs up. I just want to make sure that the audio and the video is coming in well, and we are ready. Make sure that you also vote in our poll we have going on right now. And we've got lots to cover, right? We've got so much to discuss in this live stream because we've got interest rates, inflation, of course, different line items, market expectations, predictions from different banks, what makes CPI altogether. So this is going to be it. This is very, very, very important for equity markets. It's really going to dictate how we trade for pretty much the rest of the year. I mean, of course, we're going to get some new inflation numbers. We're going to get other interest rate expectations and the Fed meetings and whatnot. But this really sets the tone for the year, right? So it's going to be very, very important. Markets obviously flat, so we're not really gapping up or down pre-market. We have got the QQQ slightly higher, 25 basis points. We got the SPY here up over 30 basis points, and the Dow is more or less flat here. The 10-year yields are slightly down about 1%, trading past over 3.5% at the moment. So I would say this, like, the markets are definitely expecting some good numbers. It's kind of like, as I mentioned in my yesterday's videos, market positioning right now, I feel like is very much on the long side. So we are, I think, very much pegged for some good numbers on inflation. So any type of minor disappointment, any type of slight miss would not be well received, in my opinion, if there is even a slightest of chance that inflation misses on those expectations. We could see some potential damage in the markets. We'll find out, but I will say, like, the markets are definitely optimistic going into this print. So we do have the polls going on, 136 votes right now. It's pretty even, so it seems like we are very, very even across the board. Over 6.6%, we got 27% of the votes, 6.6%, 16%. Another 27% votes for 6.5%, and over 6.5, less than 6.5%, we're at 30% votes. So very, very even across the board. Right now, the Fed funds futures right now pricing in for a 25 basis point hike from the Federal Reserve on February 1st. That's going to bring our rates to 4.5 to 4.75%. But again, 50 basis points is only pegged for under 25% of the probability. Majority of it, 75%, is going to be market's expectations of only a 25 basis point hike in February from the Federal Reserve. So let's just start with inflation, right? So again, this is what CPI is made up of. So shelter, again, is about a third of CPI. So that's 32% of inflation. Food makes up the next big component, overall CPI, 14%. Then we got transportation services and energy kind of go hand in hand. We got 8%, 7.5%. Then other education, communication services, transportation services, medical care services, household apparel, other goods, recreation services, so on and so forth, that make up the other parts, other components of overall CPI. This is the consensus. Again, the consensus, there's been some confusion. As I pointed out in my other video, there's been some other numbers from Bloomberg, from Dow Jones, from Econ Day, from investing.com. So all different sources, you are pretty much getting different consensus estimates for month over month and for year over year. So I'm going to go off of investing.com because this right here is one of the best ones, because not only are they at 0.0%, but they also have the math right at 6.5%, because that's where we will be if CPI obviously came in at 0.0%. So if we kind of look at our mathematical table here, you'll notice at 0.0%, we'd be sitting at 6.5%, right? So that's correct. And that's what I'm going to go off of when we're looking at the consensus. But of course, Econ Day 0.0%, that's month over month. Year over year 6.6, food and energy excluded, that's core CPI 0.3, and year over year 5.7. Bloomberg is different. Dow Jones estimates also different. And we are on CNBC also, there were many headlines suggesting that investors are expecting deflation into this print. So negative 0.1% is going to be for December. That's the consensus, apparently. And 0.3% for core, 6.5% for year over year, and X food and energy is going to be sitting at 5.7%. So that's what I have right now in the polls also, that you are more than welcome to participate, and I encourage you to do so that we can get a good understanding on what the expectations are. So let's just take a quick look. Again, this is the poll. You can vote, and of course, we'll see what is going to be that number, that print we get in about 25 minutes or so. Now, this right here is JP Morgan's plan on CPI. I also mentioned this in my yesterday's video, which, doesn't quite make any sense, right? How can you draw any conclusions whatsoever from JP Morgan? If it's below 6.4%, apparently that's going to be very bullish. That is going to be bullish, but to what extent, right? How can they what conclusions can they draw that a below 6.4% consensus is going to put us up 3.5% for S&P 500, right? And somewhere between 6.4 and 6.6% is going to put us roughly up 1.5 to 2%. But bottom line is that they are expecting markets to be higher, about 85% probability. That's what I mentioned earlier, is that we are definitely pegged for a green day. That's what the consensus is. That's what many investors are expecting from the markets today. It's kind of like we're going into this day with really high expectations, right? Everybody's expecting the markets to be higher on a very good inflation print. And when everyone is expecting the same thing, we all know what the market ends up doing. So, but then above 6.6%, there's a 15% probability that the markets will be down 2.5 to 3%, but that's just JP Morgan's prediction and probability outcomes that they have. We also talked about inflation fixing market, which is based out of interest rate swaps, and they are expecting the inflation to be negative 0.13% month over month, which would be huge. That would be crazy if we actually saw that much of deflation. That will be obviously a lot better. And again, right, if you take a look at what this report suggested, this is Bloomberg median estimate of 0.0%. Once again, I feel like there's just so much confusion because I just showed you what Bloomberg had, which was negative 0.1%. And in this report, they pretty much mentioned that Bloomberg's median estimate is 0.0%. It's like every single source, it's like completely different numbers for what the consensus is, right? So there's been a lot of confusion, to be honest, for this inflation numbers. We haven't really seen this much confusion in any of the other numbers that we have seen, but this one, it's just been all over the place. But anyway, so no CPI surprises, please, green mic. So what is the ticker code to follow pre-market? So it really depends what you want to track, Jazz. So if you want to track something specific, I can give you the pre-market ticker for that. But it really depends what you want to track, so to speak. So let me know, and I will give you the right ticker here. Yeah. So even Oleg is saying you're right. Even the simple math calculations indicate heavy manipulation because. Again, if you just go off of the math here, 0.0% would put us at 6.5, 0.1% would put us at 6.6. If you see any type of deflation, it would come down to 6.4 for December. So again, we'll find out soon enough what that number is going to be like. Green mic is due. It is coming. But this right here are going to be from Jonathan Farrow. He actually tweeted about an hour or so ago, which I took a screenshot of, and this is inflation guess year over year versus 7.1%. So these are all the different banks, institutions, pretty much talk about big money and what their expectations are for inflation going into today. And remember, previous number was 7.1%. That's what we also have on our spreadsheet here. 7.1% is the previous number right here, year over year. And these are all the institutions and what they're expecting. So Citi, 6.5%. So Credit Suisse, Citi, Capital Economics, and JP Morgan, SocGen, TD Ameritrade, they're all expecting 6.5% on a year-over-year basis. Then we got Goldman Sachs, BNP Paribas, Barclays, B of A, HSBC, Jefferies, Morgan Stanley, UBS, all expecting 6.4%. And then we got Nomura and Wells Fargo are some of the most bullish on Wall Street right now, expecting 6.3% for this print on a year-over-year basis. This right here is a nice sort of list on how the markets have performed on the day of CPI over the last 12 months. So what you'll notice is the more recent trend, October, November, and December, the markets have been higher, right? 2.6% in October, 5.5%. That was that crazy day. Remember when the Nasdaq was up like 7% from its low to all the way to its high, but ended up the day like up 5.5%. And this is the S&P 500 gain, by the way. So December 0.73%. September, again, was a very brutal month. September as a month in itself, seasonality wise, it's very brutal. And in the month of September, we saw prices drop 4.3% on average for the S&P. August was also green, 2.13%, but the entirety of the first 6 months or so was brutal, right? Every CPI print, we went down. Last January, about 12 months ago, we were up 0.28%. So again, January is here, and this is for the month of December, right? So again, that January print was for the month of December. This is just market movement, not inflation. This is just market movement on the month when inflation came out for the previous month. So the current trend is good. Hopefully this continues. We'll find out today. And again, like I said, the market's expectations are super optimistic, I feel like. This is how 2023 has kind of shaped up so far. So some of the sectors that are pushing higher, in other words, sector leaders, ARC, definitely up 11.3%. So lots of momentum, being driven on ARKK, 11.3%. We got semiconductors, so SMH, with the likes of NVIDIA, AMD definitely pushing higher, 9.2%. We got retail and real estates up 8.2 and 6.4% respectively, whereas the S&P 500 is up 3.4%. So we have seen a consistent move to the upside for some of the more volatile sectors, I should say. They're a little bit more high beta sectors. So they're definitely pushing through in 2023 so far. When it comes to global markets, so China definitely outperforming right now. It's up 12.4% so far. So that's the MCHI index. So for markets in 2023, and then followed by Europe. So stocks 600, surprisingly though, because inflation is much higher in Europe than it is in the US. But the rates are also lower, and at the same time, there's also some debate that the Europe is already in recession, but they're still doing much better. Their market's up 5.3%, versus, of course, China kind of leading the way right now with up over 12.4%. So China is one of the best performing markets in the world right now. So that's going to pretty much wrap it up. This is the market's movement over the last 12 months. This is what the expectations are from all the institutional banks. We've already gone over the expectations on a consensus basis, which is like all over the place. So again, we'll find out in about 18 minutes or so, 17 minutes or so, what those inflation numbers are going to look like. Make sure that you drop a like, subscribe, and also vote if you haven't already. We want to get to at least 1,000 votes before the CPI numbers come out, so we have a good data set. But I feel like the voting right now is very much even. It's like we don't have a clear winner. It's like all over the place, and that's also how the consensus has been, right? It's been like higher, lower, like to last minute changes, last minute predictions, and it's just been this CPI print. I feel like it's been all over the place right now. So we'll see what that number looks like. So Kevin says short Powell. So, yeah, we'll take a look at the bond market as well. Right now, 10-year yields are slightly down about 1%, trading a little bit over 3.5. Now, yield curves are still inverted. So we're still seeing the 10 versus 2 inversion. We're seeing the 10 versus 3 month, and we're also seeing the 10 versus 6 months. These are pretty steep inversions, so to speak. So definitely we do have the short-term bonds yielding more than long-term bonds because of that uncertainty related to inflation and interest rates, which is driving a lot of momentum towards the 10-year yield, which is pushing the yield lower and lower. And of course, because the prices are moving higher, yields are moving lower, and short-term yields are definitely pushing higher with respect to the longer term. And India reported deflation. Yep, so I did check that as well. India reported some very good numbers on inflation, so that's already some good news coming in. And again, the US will find out in about 15 minutes or so. But let's just quickly go over some of the calculations for interest rates. So right now, the Fed funds futures, like I said, is pointing to a 25 basis points hike, right, in February. So we got that meeting in now under 20 days. So that's going to be on February 1st. That's where the next Fed meeting is. And if you come over to probabilities, you'll notice that we are still pegged for 25 basis points. We're pegged for another 25 basis points in March. So we didn't have any meeting in January. We've got the next meeting in February, another one in March, and then no meeting in April, and the next one's going to be in May. But the market's right now anticipating only 2 more small hikes of 25 basis points each over the next couple meetings. And then for the rates to stay at 4.75 to 5%, and that's a little bit different than what the Federal Reserve itself has said in their summary of economic projections, right? The SCP, they've guided for 5.1%, but the market's pricing in for just a little bit under 5%. So that there is a little bit of discrepancy. Now, either the market's right in anticipating that the Federal Reserve is going to pause a little bit earlier and they're not going to raise rates to 5.1%, or the Federal Reserve is right in doesn't matter what happened, doesn't matter what type of data we get, we're still getting rates up to 5.1% or higher. We don't care, right? So one or the other is right, the other one's wrong, and we're going to find out, of course, eventually. But if inflation numbers obviously slow down, this print, which comes out in about 15 minutes or so for December, that's once again going to stoke some optimism in the markets that the Federal Reserve is definitely going to pause. And they're definitely going to give us a slower rate hike in February and then another one in March. The last thing the markets want is any type of uncertainty and any type of disappointment. So just because inflation numbers come in very solid today and we get, let's say, a rally going into today and going into the next couple of weeks, if the Federal Reserve comes out on February 1st and Jerome Powell once again says that, look, inflation's still much too high despite the consistent trend over the last 3 to 4 months that it's slowing down, we still believe it's got ways to go. We're raising rates by another 25 or whatever, 50. 50 is obviously going to disappoint the market quite a bit, but 25, and then he says that, okay, we're going to keep raising rates and we're going to keep them there for longer. That in itself can once again stoke some fear and bring the markets down and kind of water down all the rally that we had over the last couple of weeks. And this is on February 1st. So just because we get a very nice print doesn't necessarily mean the markets have a technical shift happening, and this is going to lead to a very nice recovery back higher, back to all-time highs. At the end of the day, the Federal Reserve gets the last say. Jerome Powell literally gets the last say, and what they end up doing is what's going to drive the markets in 2023. That's what drove the markets in 2022 as well. If it weren't for inflation, markets were fine. Inflation drove interest rates, which in turn drove the markets. So at the end of the day, it's literally the Federal Reserve and Jerome Powell that have the last say. So yeah, this is definitely going to be a nice tradable market catalyst today, but we'll of course find out what Jerome Powell also has in store for us on February 1st. Are we going to watch on TV feed when the number comes out? So we are going to look into the actual report here. I'm going to reload this page in about 13 minutes as soon as that number comes out. So January 12th, we're going to get that new report to also come out. So we're going to get this number updated. So we'll see CPI for all items. First thing we're going to look for is this headline. CPI for all items rises what blank in December as shelter and food, whatever the numbers are going to be. We're going to look at this number, then we're going to open up that PDF. But yes, I'll also have the CNBC on in the background just to kind of listen into that as well. So a lot of Twitter drama has quieted down mostly. So Tesla will mainly follow the macros now, I think. So Tesla, we can go over that because we do have some time. But Tesla here, let's see what we got. So we are flat. We got a nice breakout yesterday above 120. So we are, decent volume. I would say volume was obviously higher than the average 10-day volume. But right now we're just kind of sitting above 120, which is good. This is a new support for Tesla. So I do think there's some opportunity for Tesla to consolidate. Of course, today we got the CPI numbers, so it's definitely going to be moving quite a bit. But resistance and target have got up to 153 for Tesla right now. Support level is going to stay put at roughly around 120s. And intrinsic value was lowered for me, but that's going to be staying put at roughly around 112, 115, around those levels for Tesla. So let's see how many votes do we have. We've got 428 votes. Come on, we got 11 minutes. I'm sure we can at least get up to over 800, 900 votes. And let's see what everybody's expecting, right? So we got 6.6%, over 6.6%, 6.5, and less than 6.5. So those are all going to be the different probability outcomes from what we have on our spreadsheet. So base case, bear case, optimistic, and bull case for the CPI. So admin CPI comes out in about 11 minutes or so right now. You know what? I'm going to put up a clock here. I did have a clock. Forgot to turn that on. So I'll have to increase that to, 11 minutes. There we go. Perfect. All right. So in under 11 minutes now, I've got the clock up on the top left, and you should be able to see that. All right. Volatility slightly flat, not really moving much, 0.33%. And going over to the PDF from last time, we talked about how which items were obviously higher. So when you look at the month over month changes, we did get energy down because energy prices were lower in the month of November. They were lower in the month of September and August, but they were higher in October. Now in December, they were flat, right? So December, they were very, very flat going going into the sprint, I'd expect some flat movement for energy. However, natural gas was down quite a bit. Retail gas was down quite a bit, so that could help energy decline on a month over month basis. Shelter prices, we've talked about it. They have been selling off. They have been coming down over the last 4 months, but they haven't quite reflected that in the CPI numbers. So if they actually do come down, that's going to be a big dub for CPI overall, right? Because it's a third of inflation, right? So going back to our first screenshot, about a third of inflation is overall shelter. So, and then of course we got used car prices, trucks, new vehicles, commodities, other food items. Food is always a wild card in my opinion. So we'll see what that month over month change looks like. So when it comes to TQQQ, SQQQ, so yes, I'm not going to go directly into it right off the print because I feel like it's going to be more of a, trading that simple CPI is going to be more of a gamble than it is a trade because any of those numbers can, drift the markets higher or lower in a very volatile fashion. So I don't want to strictly bet on that CPI print. I would like to trade after the market, digest that CPI numbers, and then whatever price action we get, I will like to trade off of that once the market opens. So that will be in play, but I'm not betting on the CPI numbers because to me, obviously people can, but for me, it's a little bit of a gamble than a trade because if the CPI numbers come in better, markets can rally. If they come in lower, markets can go down. It's kind of like, we don't know what that CPI number is going to be like. So, anyway, food is still expensive. Yeah, so that could still be higher. That's a big wild card for inflation. So natural gas has the biggest food input and should drop food. But anyway, food is not monitored Fed item as it is excluded in PCE. So that's true. I mean, core CPI at the end of the day, core CPI, PCE, personal consumption expenditure is what the Fed is really looking for. But, you kind of get that CPI is the headline number. That's what's being reported most. So that's also something that, day-to-day consumers, average, consumers are also paying attention to, right? So if those are not coming down, then, they don't care about the PCE. So CPI is more towards the consumer side, I would say. And of course, core and PCE is more towards the Fed's preferred measure of inflation. Okay. Hassan says, I already did it now. I'm sitting here to make sure I don't get destroyed. Well, if you are, just make sure that you have your tight stop losses. If the markets do get like a bit of a head fake, because oftentimes, you oftentimes also see the markets kind of drop on that very, very important catalyst and then settle and then start pushing higher, or it kind of spikes in the first couple minutes or a few seconds and it starts dropping, right? So those are head fakes, which can trigger you out. So make sure that you are kind of, Gene says 100 calls. It's 85% chance we get good numbers. Well, 85% chance, that's according to JP Morgan, right? JP Morgan saying that, look, 85% probability that we see an up market today. Well, if you believe in JP Morgan, then by all means, go for it. If you believe in their estimates right here. But, I don't. I'm going to be honest. So, but yeah. So I'm going to do a quick audio check just so we can make sure. And then we'll also look into, let's see here. I'm just going to bring out this and we're going to go live. So I'm going to do an audio check. Let me know if this is working and it should be fine.
Or boards who would much prefer to accuse everybody of a crime. And I'm not saying Sam Bankman-Fried is innocent in this at all. That's not what I'm saying.
That's just it.
But I'm saying when you hear John Ray or others say what they say, I also, my antenna goes up on all of these people.
Okay, but what
Everybody has a motive on all sides of
what
this.
What about the people who have now flipped and said that, yes, this was all a big scam, and that, by the way, they've said that they themselves are responsible for this stuff and are probably going to do jail time as based on their own admissions of what was going on there?
Oh, I think that they have their own incentives too, which is to say that some of them are worried about being prosecuted. Some of them are worried about how long they would ultimately be sentenced.
All right, perfect. Sounds good. Audio's great. So we'll play that in the background. We'll take a look at the markets. And at the same time, what I'm going to do is I'm going to set us up here for that reload. And as soon as that numbers come out, we'll see how much it went up or lower. Man, if we actually see, imagine CPI for all items falls 0.2% in December, that would be fantastic for the market. We could either, it's like CPI is just like one of those days where you could either have a great day or you could have a really bad day. It's like there's no middle ground. All right? For CPI, for FOMC meetings, like these are events every month, every other month where it's like either a really good day or a really bad day. There's just no middle ground. So that's what really is so exciting about these days. It's like crazy. Anyway, less than 5 minutes left, folks. If you haven't voted already, make sure you do that now. We're at 568 votes. So make sure that you do vote for what you're expecting for CPI. All right. We are here. We've made it this far. We'll be fine. We'll be fine once we I can tell you 10 minutes later we'll be fine. We'll be just fine. Gene, do you think we bottomed then? I think earnings is going to be a pretty good indicator for us looking at the markets, looking at the macros to really understand whether markets have new lower lows to form. Because, once we start to get Friday's numbers from banks, which are the first ones to go for earnings, there always are, we should start to get some insight as to how well earnings are holding up. And if they're not holding up super well, then I think the markets may have a little bit more downside left because, to be honest, if earnings per share don't hold up, then the market multiples expand. They are going to be much higher. And as a result, there's going to be more potential downside. So, and again, same is true on the other side. If the earnings are going to be holding up, they're really strong, people are still spending, companies are still making profits, margins are steady, then market multiples are fair. And there's potential for us to, pretty much call a bottom already, that we're already made a bottom and for the markets to rally higher. But I think earnings are going to be very, very important. So let's see, Caddy, you sound like Ryan Reynolds from that movie. Don't have a good day, have a great day. No, I saw an ad for Ryan Reynolds. I believe he owns Mint Mobile, right? Is that a different person that I'm thinking of? I'm pretty sure he's the one who actually owns Mint Mobile. Because I also have the Mint Mobile service, and I saw one of his ads that they actually used ChatGPT in their script, which was pretty cool. It was a cool ad for Mint Mobile. But anyway, 2 more minutes left. So we're going to turn this on, and I am going to turn off my microphone. You know what? I'm going to keep my microphone on. I just want to make sure that it doesn't pick up. No, I'm going to turn my microphone off. So we'll keep this on and we'll look at the markets. We'll put the SPY down here. And we're on the 5-minute chart for both. And we're ready. 1:30 left. Let's do this.
Effectively regulating yourselves, where do you see the fault lines? I mean, when people say to you, I can't support this, they tell you what?
Well, and so arguably it's interesting because this is a bill that across the political spectrum, we have support. The kind of the most left of the Democratic Party, the most right of the Republican Party, and everybody in Congress across geography, across committee representation, across ideological spectrums. And in fact, we're introducing it today with more co-sponsors than we've ever had at the point of introduction. And I've already received texts from additional colleagues saying, I read you're introducing it today. I hadn't, put my paperwork in, but I want to be on it when we introduce. And really what it comes down to, some of the pushback that we've heard from colleagues is just, what would be the impact on them? How would this sort of change things? And what Chip and I have said all along is it's really straightforward. We go into classified briefings. We have meetings with CEOs of large companies who share very openly their challenges, their experiences, their successes, what's working, what isn't. And the American people should never be reading reports in the news that Congress had a classified briefing on COVID or Congress had a classified briefing on a potential invasion of Ukraine, as was the case last year. And then we see lawmakers buying stocks that so clearly would benefit because of those difficult situations, or selling stocks that would be expected to potentially lose value in that circumstance. And it's clear, if we just kind of take it off the table, that restores trust.
We got data.
Congressman, we got to jump. We have some data that's coming across the tape in just a couple moments.
CPI,
Thank you again
data
for joining us, though.
It is, we got about 10 seconds. Time for the December CPI number. We all need to take a deep breath. Rick Santelli has it. Rick, what is it?
Yes, our December read on PPI, expecting the headline number to be down 0.1%. It delivered. It's down 0.1%. High water mark, June of this year at 1.3. That was the highest since 2005. Strip out the all-important food and energy, it's up 0.3, exactly as expected. And that up 0.3, how does it compare? High water mark in this series was April of 2021. It was up 0.9. That was the highest level since 1981. Let's go to the year-over-year consumer price index. Expected up 6.5, exactly up 6.5. High watermark June of this year, 9.1. This is now the 6th consecutive lower month, and the high watermark goes back to 1981. Finally, in my opinion, the most important metric, CPI year over year, X food and energy, known as the core, expected up 5.7. All four of them exactly as expected, up 5.7. And high water mark September of this year at 6.6. This marks the 3rd consecutive month that this metric is lower. And as you look at what's going on here, interest rates, well, they moved a bit lower. Now they're kind of hovering a bit. But the fact of the matter is that for whatever reason, the equity markets are going lower. Interest rates have moved off of their best levels. And I think that the reason is that we're still looking at numbers that are a bit sticky. And I think expectations is something we, the insiders, pay a lot of attention to. But in the final analysis, I think the issue is that many would have liked to have seen it maybe a smidge lower. Let this thing simmer. I think, in my opinion, is you get a lot of cross currents based on what positions investors had going in, what they're trying to put on now. But ultimately, I'm not sure if stocks are going to be that much lower as the Dow futures indicate. And do remember, stocks were trading at the new highs of the week before this number, and interest rates were trading at new lows for the week before this number. I think that about covers it, Joe. Back to you and the panel.
Yeah, we've had a couple of numbers that were so much, so positive in terms of maybe allaying some fears, Rick, I guess, cooler than expected. I think people were hoping for a continuation of that trend, and we had already ratcheted down expectations, and they hit those expectations. They just didn't surprise us with even being cooler than expected. And who knows where the market ends up today? But the initial reaction was, "Wow, I wish we had gotten an even cooler than expected number," and that obviously isn't what happened.
Exactly. I think.
All right, folks. So what did we get? We got exactly as expected. And look, negative number 0.1%. And how is it that like it's just so weird? Like they couldn't get the math right on these consensus. Like I was talking about this since yesterday that if we see deflation, we're going to see 6.5% or lower. And we actually got 6.5% on a year-over-year number. So let's just dive right in. So 6.5%. December number coming in negative 0.1% for the month of December. We did see a drop in the markets early on. This was like a 2% drop on the NASDAQ right off the bat. We did see, of course, SPY also pull back 1.5%. Now we're starting to recover a little bit. And, you know, what was one of the key things that we talked about in our yesterday's update and our live stream was market expectations. They are really, really pegged to extreme levels, right? We are literally very optimistic going into this print. And I think that might have been one of the reasons why we are seeing a little bit of a sell-off right at 8:30 a.m. Eastern, right? I'm sorry, I got to send out an alert here that let's see. All right, so expectations super high. So that's one of the reasons why we did see a bit of a drop, but now we're starting to push right back up. We're more or less flat at the moment. I just want to take a look at TQQQ. Okay, so we're definitely pushing higher very, very much. 1940 here, seeing a lot of momentum. 1945, very nice move so far for TQQQs. We'll see. All right, so extended. And I'm out. I might have sold a little bit too early here, but had to. Oh, I'm going to send out a letter. God, this is so hard. Oh, man, 1950 now. All right, 1955. We're seeing a lot of momentum to the upside here. And overall, let's just break down very quickly the inflation numbers. It's actually tough, man. Anyway, so negative 0.1%, 6.5%. Energy, look at that. Fuel oil dropping 16.6% for the month of December. We got gasoline, energy commodities. We got energy overall down 4.5% month over month. Food was still higher. So food was still slightly higher. Shelter prices were still up 0.8%. I think a lot has to do with those year-over-year comps. I think year-over-year comparables are definitely helping inflation right now. So that's one of the reasons why I think we are seeing the year-over-year number come down, so substantially, right? 7.1 to 6.5%. So if we come back to the spreadsheet here, so the actual number was negative 0.1, 6.5. We got 0.3 and we got 5.7, I believe, for core. So if you think about it, we actually did see optimism here. We saw all base case over here. So a lot can happen intraday for the markets, but we are flat, right? So we are not really moving at the moment. I just want to take a look at core. So core, all items as food and energy year over year was sitting at, is this the older number? Yeah, this is the older print. Okay, 5.7. Okay, so we are exactly at the base case, literally base case, 6.5, 0.3, and 5.7 year over year for core. The actual for month over month was a decline, so that got pushed down a little bit. And that's the thing, right? If the consensus already was so optimistic, if the actual number ends up being this way, we don't see a lot of momentum, right? So base case got hit, markets are flat. So we're not seeing a lot of momentum. Although we did take a trade on TQQQ's pre-market. So I got out at 1950, got in at 910. That's, what is it? So let me just take a quick look. That's a good scalp. I literally bought right when the markets were selling off here. And that was a good 2% trade right when the market sold off. So that was literally less than a 3-minute trade for TQQQ. This entire rally that we saw. But yeah, that's it. Jobless claims numbers. We're going to take a quick look on those as well. And let's see what those are. But base case. That's what we got. I think market expectations were too high going into this print. I think, talking about this since yesterday, but it was too optimistic. I think the market had to really push like negative 0.2% or lower for this to be a very, very bullish rally, right? Otherwise, we're just like flat. Of course, the days just started. So, a lot of the intraday price action will happen. Like, we don't know how the day is going to end up. But if you take a look at QQQs, they are literally flat, like no change. And SPY is also just flat. It's like CPI didn't even happen, right? It's about that level right now. DXY, let's take a quick look. So we are seeing the dollar index starting to break below 103. We're still like in this support. So we're still in the context of this sort of green rectangle. So right now we're still seeing a little bit of that support here for DXY. Down quite a bit here, 11% from its highs, of course. But right now still in that support. So we'll see how that trades moving forward. But Econ Day is not showing up. If anybody's got the jobless claims numbers, let us know. That'd be great. I would really appreciate it. But let's see. So, all right, and we'll take a look at the bond market as well here very quickly. Just, All right, so the bond market right now, we got the 10-year yield is down 1%. Again, no change, literally nothing. What a useless print. I would say what a useless expectation, because the print was good. Print was really good. Overall negative 0.1%. If this was a surprise, imagine what the market would have done, right? If everybody was expecting, let's say, a 0.1% gain or no change, 0.0%, if that wasn't pegged down lower, 0.1% yesterday, this would have been a huge surprise, and the markets would have been up like 1.5, close to 2%. Easy. But the fact that it was pegged down going into this print, everybody was expecting this number, and it came through, nothing. Literally nothing. 205,000. Okay, so that's a little bit lower. So initial level came 205,000, 26, 215, 215. So, okay, so that's been pretty consistent. With the previous weeks, 205,000. And now the markets are starting to rotate back down 0.5% for the NASDAQ. S&P is down 0.24%. If you kind of break down, okay, there's some error in the database. I'm sure lots of people are checking that out right now. But let's see, individual items, what actually pushed up. Energy was down, food was slightly higher. Shelter, I'm surprised shelter was at 0.8%, and still we were able to come down and come down month over month 0.1%. That's quite interesting if you think about it. From an individual item standpoint, we did get for the month of, let's see, gotta come down a little bit. All right, so all items less food and energy. One of the things that I really like to look at is all items less food and shelter as well, because food and shelter, and then all items less food, shelter, and energy as well, because those are some really, really good metrics, because it helps you understand how much of a contribution food, shelter, energy are actually making on inflation, right? So if you kind of exclude those items, we're right now at 4.4%, right? So we're actually much lower than where we're sitting at the moment at 6.5. You can pretty much shave off over 2 percentage points, 210 basis points off for food, shelter, and energy. If you just simply take out food and shelter, of course, we're at 4.8%. So shelter also is making a big contribution. And if you simply take out shelter, right, all items less shelter, we're at 5.9% on a year-over-year basis. That's also obviously much lower than 6.5. So it just goes to show how much shelter prices are making contribution in overall inflation. But let's just see what that month-over-month change is. So November through December, we're going to start at the top. We're going to go through everything. I'm really curious about eggs as well. What are egg prices doing? So, okay, negative 0.1%. This is all items CPI. Food 0.3%, minus 1% for flour and prepared flour mixes. We got negative 0.5% for rice, pasta, and cornmeal. Negative 0.7% for white bread. 2.6% gain for fresh sweet rolls, coffee cakes, and donuts. We got negative 1.1% for meats, poultry, fish, and eggs. No, actually, that's something else. So that's frozen, refrigerated bakery products, pies, and tarts. 1% gain, 0.1% is for meats, poultry, and fish. And then 1% gain for eggs as well. 1% gain month over month. So definitely egg price is higher. Negative 2.9% for bacon and related products. 3.9% is going to be for Frankfurters. Frankfurters always been higher. Every time I've looked at Frankfurters, they've always been up month over month. Look at that, 11.1%. If you simply talk about eggs, I don't know if you guys can see that, but look at this, 11%, 11.1% month over month for this eggs here. What a gain month over month here. Eggs was actually a much better investment in the month of December than anything else. Should have just bought eggs in the beginning of the month and sold at the end. Obviously, they would have gone bad, but hey, crazy 11.1% gain. Negative 1% for milk. We got fresh milk other than whole cheese and related products. Also selling off minus 2.6% for fresh fruits and vegetables, minus 1.3%. Let's see. We got 3.2% gain for dried beans and peas and lentils. I'm just going over some of the big changes month over month for food items specifically, because that's still up, and then we'll talk a little bit about shelter as well. But 3.4% for other fats and oils, including peanut butter. I actually do love peanut butter a lot. Can't live without it. 2.2% drop in instant coffee. And this is again energy, 11.9% decline in fuel oil, other fuels, fuel oil, 16.6%, 9.4% for energy commodities. Across the board, energy declined. Gasoline, energy services, gas services was up 3%, but other modal fuels, gasoline, unleaded, everything down over quite a bit here, 8%, 9%. 4.1% increase in laundry equipment. We got 2% decline in clocks, lamps, and decorating items. And then finally, we come down to some of the apparel items, which are pretty much not a big contributor to overall inflation. So I'm going to skip past these numbers. And then finally, we come over to shelter, which was up 0.8%. Rent of shelter, 0.8%. Lodging away from home, 1.5%. And then other lodging away from home, including hotels and motels, at 1.7%. So shelter prices still higher, and I'm surprised actually, despite the gain in shelter prices, markets were able to, inflation overall was able to come down. So overall, I would say markets very flat, not really making much of a move. And that's where we are. And again, we're still we'll see what the next 6 hours look like for the markets, obviously, but Tesla here down 30 basis points. We got Apple slightly down 24, Google's down 49, and we got Microsoft also selling off 0.37% at the moment. So Chirag says, if shelter went up, that makes me more bullish for future prints. That's true. Despite shelter prices going up, if inflation declined on a month-over-month basis, that in itself is extremely bullish. That's a big improvement. But if shelter prices start going down, imagine what will happen. I mean, we'd be looking at like negative 0.5, negative 0.4% prints. So right now, 83% probability when it comes to Fed funds futures. So we were earlier at 75%. Now we're at 83% for the Fed funds futures for 25 basis points. So that's almost locked in like about 20 days. That's how much time is left. So 83% and then 16% probability for us to see a 50 basis point hike, which I think is a little bit more likely from considering Jerome Powell. But, we'll see. Oleg says Kathy Wood and Jeremy Siegel are right with the deflation. So that it's definitely the beginning of something that's looking like deflation. So we'll obviously find out over the next few months if that's actually the case, if deflation is actually happening. But I'm expecting a lot of coverage from CNBC on Jeremy Siegel, and then a lot of tweets from Kathy Wood as well after what we got today. But also want some commentary on shelter. I think shelter prices, Jeremy Siegel, his next comments on rents and shelter prices, I think are going to be very interesting. If they actually do start to roll over, then I think we're looking at some serious month-over-month declines. I mean, I wouldn't be surprised if next time the expectations are negative 0.3, 0.4, 0.5%. That would be incredible. Oleg is saying 100% we will have zero hike. Pauses as we are in deflation and bond issues are foreign demand. I still think that we're at least due for another 25 basis points from the Fed. What happens after, obviously, is up for the data for the different reports that we're going to get. But I think 25 basis points is at least due. Like, I think that's going to happen. So, Trivio, I'll have to update my inflation grid because all the index levels change. So one thing, it's not super automated. Like, all these index levels change after the report comes out. So I have to update these numbers, and I will do that. I'll pretty much do a video, and we will be talking about, so for December, I'll have to put that index level in, whatever that is. And we're obviously seeing minus 0.1%, and we're at 6.5% right now for these two numbers, but I'll have to put that index number in. So, because this is not exactly like the headline number is not exactly that, like these are numbers that are rounded up and down. So I'll have to get that index level, and then I'll plug those numbers in so I can update you guys with where we are with those inflation readings for year over year and for month over month. Okay, so I'm going to end the poll. Obviously, we're done. But it was very break even We pretty much got at 6.5%. So 6.5% was about 26% of the votes. So that's still pretty good in my view. And this was a good report. This was a report that definitely showed a lot of improvement. I think intraday there is potential for us to rally a bit. And if you come over to JP Morgan's estimate, where is that? So, okay, 6.4 to 6.6%, while they're expecting the markets to be up 1.5 to 2%. So maybe that leads us to some potential upside intraday. We're already starting to see a bit of recovery here. So we have seen a lot of volatility, of course, for the QQQ. So we'll see if we actually do break above 279 as a resistance for the NASDAQ. So now time to add the calculation for month over month. Yes, I'll do that. I'll do that as well. I'll include some serious deflation numbers so that we can get a better understanding of where inflation might be. Honestly, if we actually do see negative 0.5 and negative 0.7%, man, inflation will be literally at the Fed's target in March or April. It'll be that soon if we actually continue to see deflation in the economy. And then you'll have the Federal Reserve literally drop rates down so fast that it's going to be bull rallies all across the board. It's going to be greenery everywhere. Everywhere you look is going to be green. You'll have to really search for red in the market. I can tell you that much. So what's happening with BBBY? So is that Bed Bath & Beyond? Again, I'm not super familiar with that company. What is it doing? So up 19%, could be just another short squeeze. I'm not following up with that stock. It's not a company that I analyze and look into SR on a regular basis. So, so can you please provide the report link? So, for the report, all you have to do is go to bls.gov. So that's the official website for the government, for Bureau of Labor Statistics. Then go over to subjects, go over to Consumer Price Index. That's the first thing under subjects. And then you come down, and this is going to be that report, news releases, and you click on PDF, and that'll take you to that most up-to-date report for December. How much did men's undergarments go up? Because I need to get a new pair after watching these candles. Oh, Kevin, man. You never fail to crack me up. NVIDIA, let's take a quick look. NVIDIA up almost 1% here. Looks like the markets are starting to push through here, and I might have gotten out a little too early on the cues, but obviously we'll see. We'll see if I want to take on another day trade here intraday. But there's still, intraday, there's going to be a lot of momentum. I feel like lots of back and forth as people start to kind of digest this report in. Job numbers out. So yes, jobless claims are out. Job numbers were due last Friday because that was the first Friday of the month. But the jobless claims numbers came in at 205,000. So TSM. I do think TSM is actually great value. I did an analysis. Actually, this entire gap got filled, so we can remove that now. And we are now starting to break above its 200 SMA, so that's really good. Resistance is going to be staying put around roughly around $91, $92. From a risk reward basis, I don't think TSMC is a great trade here, but if you're strictly buying for the value or like the fundamental for this company, and you're talking about long term for TSMC, then I think it's still got some good value here of $85, $87. But next resistance at $91, $92 per share. So QQQ is still getting rejected here right at the pre-market high of 279. So that's gonna be the level to break out of. We'll see if you actually do break above that level. There's already a lot of trading happening, like pre-market. There's already so much volume on the Qs. We have already got like 250,000 shares, 500,000 shares being traded on these candles, so there's already a lot of liquidity. Yeah, so Steve, more into options and trading at the moment. For dollar cost averaging, still really waiting on the earnings. Once the Q4 earnings are out, Then we'll have a better understanding of the S&P 500's earnings as a whole for 2022. And then we'll have those forecasts for 2023. So today's inflation print, very, very good. We want to see this more and more. Like we want this trend to continue moving forward. But if earnings start to deteriorate, because look, what happens is a lot of these interest rate hikes that happened in 2022, those effects are not going to be seen a few months later, right? Because it's a lagging indicator. It's not like the Federal Reserve raises rates in one meeting and then all of a sudden earnings drop, consumer stops spending, and rates go up. All these things take time to play out. So if rates are going to be higher, if they're at 5.1%, a little bit over 5%, then earnings are going to take time to actually show up that they are weakening. By the way, TQQQ now at 1977. Oh man, what a jump here! What a rally. What a rally here. 1982. Yeah, this is just like I shouldn't even really be watching this right now. I just like feel bad. Feel bad. The volatility here right now down 5.5%, breaking below 20 levels. First time we're seeing it after a very long time on the volatility. So ISRG, Intuitive Surgical down 4.2%. I have done one analysis, I think, on this company, but we'll take a look at this once again. I'll kind of reevaluate this company, but decent revenue, obviously profitable. Valuation super high, 71 times earnings. We've got 16 times sales, 60 times cash flow. So it's an absolute no from a long perspective right now. Super high valuation for this stock. Matthew says, good profit, Caddy, don't sweat it. Yeah, I mean, it could have like been more than double, right? Had I just held on to it. Obviously, but it's like in trading, you've always got 3 words that are banned from trading. Does anybody know? 3 words that I always mention. It's like could have, should have, would have, right? 3 words that you just cannot speak when you're trading. It's like I could have done that, I should have done that, I would have done that. It's like, yes, hindsight's always 2020. It's like but hey, when the market's open, we might get another opportunity if the QQQ does drop here right at the open. As we could see some more momentum to the upside intraday. I think intraday is going to be the next in about 33 minutes here. Yeah, AMD should do well as well. So again, lots of companies reporting earnings. AMD is already at 1.65%. Amazon almost up to our target. So $97 almost getting hit, 1% here right now. So if you are still holding on to the swing trade, I would encourage you to at least set up a trailing stop, or if you want, you can even lock in profits considering that we are almost at target. Now, that being said, can it break out over $97 on a very strong green day today considering the inflation numbers? Sure. But $97 is going to be that target for Amazon right now. Google at the moment is up 21 basis points. So Google are not really pushing higher a whole lot, but Target's still up to $100. How is Crowd doing? I'm interested to see what Crowd is up to. Okay, so at 1% right now, $98. It's been very volatile. So CrowdStrike definitely has been very much back and forth over the last 2 to 3 days. So this is a gap that it could potentially come up to fill in, $99 to $101. My target's up to 108. That's me being a little bit more optimistic with CrowdStrike. But I certainly do see, this gap fill up to $98 to $100 per share for Crowd. Is Ballard speaking today? I think he already spoke. I think I saw some comments earlier on CNBC from pre-market. But he might be speaking again later in the day. Econ Day is not loading up for me, Kevin. Otherwise, I would have checked it for you, but it's giving me some errors right now. Musicful, Amazon's been dead for so long, just like Meta. It's sad. What stock has not been dead, my friend, except for energy? What company are we not going over that's not like dead? Like Tesla, down 75%. Google, down 40%. Microsoft, 35%. Apple has also been selling off. So it's like, yeah, sure, Amazon and Meta are down, but like the entire market's been dead for the last year. Nasdaq's down 35%, So QQQ resistance, let's see, on an intraday basis, what do we got? We got 279 that we were watching pre-market. We already gapped up over 270. So next level I'd pay attention to would be around 283, 284. So that would be a level of right here. And that's a level that we have gotten rejected at. In fact, even further back, you'll notice a couple times we got rejected here, 283.80, closer to 284, call it 284, round things up, is going to be that next resistance to watch for the markets, for QQQ specifically. Are we expecting any market moving data tomorrow? I believe consumer sentiment is coming out tomorrow, if I'm not mistaken. So let me just double check. Let me see if this thing loads up. All right, here we go. So yeah, so consumer sentiment and import-export prices are coming out tomorrow. 10 a.m. Eastern for consumer sentiment. And Bullard is again speaking at 11:30 a.m. Eastern, Kevin. Patrick Harker already spoke this morning. So yes, James Bullard is talking at 11:30. So that's where we are. So QQQs, 75 basis points. We're seeing a lot of momentum for the Qs right now. We got SPY that's up 68 basis points and the Dow Jones pushing up 0.5%. In a day where the 10-year yields are down 2.2%, volatility is down over 5%, it's shaping up to be a very, very green day, so to speak. 81 basis points already. What happens right when the market opens? Big jump up or sell off or not much? Troy, that is a very, very specific question asking me to predict exactly what's going to happen tick by tick. So I don't know, man. I don't know. Nobody knows. But look, it's been pushing higher quite a bit since that dip on the Qs. So I'm gonna predict here that we wouldn't be surprised to see a bit of a pullback before seeing some market moves to the upside. But support level is going to stay put at 279. So we'll see if that level acts as support and next target up to 283, 284. QQQ will get slapped right back down. That's also what I'm expecting here, at least into the open. We'll see what happens. Yeah, gap fill is possible for the NASDAQ, definitely. We're seeing a big gap up, 80 basis points. So we could come down, fill the gap, and then start to move back up. And that right there might be a good opportunity to get in on a day trade. All right, so let's just do our regular market poll because we do have a lot of time until the market opens here. So I'm going to ask you guys markets today. Green, red, or flat? Let us know what you think. Also, make sure that you drop a like. Right now, we're only at 205 likes with over 700 people watching. Anthony, this is another holiday weekend? What is this weekend? Am I missing something? What do we have? Yeah, what is the holiday? Because Anthony mentioned there's a holiday weekend here. What am I missing here? But yeah, QQQs continues to push higher, 0.92%, $280. We just breached that level. Okay, Martin Luther King Day. Gotcha. Yeah, so I think the markets will be closed in observance of that, right? Thank you. So yeah, markets might be closed on Monday. Wow, we've got like 3 back-to-back short weeks. Christmas week, New Year's week, and then Martin Luther King. So, jobless claims came in lower than expected, so it's not good for the markets. Well, it just goes to show that the economy, well, the employment numbers are still strong, and labor market's still tight. It's still very strong. That's just a reaffirmation after the unemployment numbers that we got last Friday. So there's not really much of a change, except that we're still getting a validation that, look, the jobs market's still tight, labor market's still strong, and can weather through the interest rate hike. So we're in a very, very interesting, and man, if Jerome Powell pulls this off, like if he seriously pulls this off, that inflation is back to 2% without unemployment going higher and without the economy going into a recession, all props to him. Like literally hats off to him and his team for pulling this off after getting so much criticism, so much heat over the last 18 months. If he pulls this off, that would be like crazy. That would be crazy, to be honest. Because like I said, once interest rates start going up, a lot of these effects don't come in right away. So it may seem like everything is fine from an economic standpoint. Everything is great. People are still employed. Unemployment's still low. Economy is not, going into severe recession right now. But it all happens, fairly quickly over time because interest rates, which are higher now at 4.5%, the effects of those higher interest rates are not going to be seen a few months from now. So that's why this is not a sprint. It's more of a marathon. We have to play it week by week, month by month, take the data as it comes in and not really get too fixated on one specific data point, right? Let it play out, let the trends play out, and then we can formulate a much better consensus and make decisions off of that. So Jay says everyone is super bullish right now. It is, right? It is. So Ronaldinho III says the one time I make the right play on CPI and it's flat. Yeah, so that's why, the specific, that's exactly one of the reasons why I didn't want to play the CPI numbers right, like whether it's going to be hit or miss, because as I said, whatever the numbers come out to be, the markets can be higher or lower. Nobody knows that. It's much better to wait for the CPI numbers, look at the price action, and trade off of that price action once the CPI numbers come in. Much better because then you have a better edge as opposed to simply gambling on the CPI print itself. It can be higher or lower. The market's reaction can be choppy. They can be great numbers. Market can still sell off. It can be poor numbers. The market can rally. So there's a lot that can happen. It's just like the earnings. Today is like an earnings call for the market, right? You know how we go through the earnings calls for the companies, and if it's a hit or miss, the stock itself rallies or sells off. Today is just like earnings for the market. This is what it is. CPI is like earnings. But in the grand scheme of things, it's for the market itself. So it's much better to wait for the numbers, much better for interest rate numbers to come out, much better to hear the speech from the Federal Reserve Chairman Jerome Powell, and then trade off of the price action that you're seeing. So yeah, when it comes to delinquency rates and of course consumer spending, I think those are some lagging indicators that we might start to see very soon over the course of the next few months, right? Because the savings are now going down, they're depleting. Savings rates are at 2%, 3%, very, very low, and delinquency rates could start to go up as rates across the board, credit cards, auto loans, mortgages, they keep pushing higher, right? The only reason why we're not seeing as many delinquencies, in other words, defaults right now as we did back in, let's say, 07, 08, is because unemployment's low, right? If unemployment's low, that means people still have jobs, and the income that they're generating is still able to service those loans. Even though the savings are depleted, even though rates are high, they're still able to service those loans because they have jobs. Once unemployment starts going up, then everything gets messed up, right? Everything just kind of hits the fan because then you've got unemployment, no income, high default rates, and prices coming down for housing, for cars, for stocks across the board. But the fact that the labor market's so tight, it's easier to service your loans. Even if you've got a high rate, you can still make the payment. All right, let's see. Oleg says today is one of that 5 best buy days. We'll see what intraday looks like. Right now, we're starting to kind of pull right back down. We're still up over 0.5%. Again, I think it's a little bit too early to say, whether, this trend will continue. Definitely, I can understand the sentiment. I can understand, how everybody's kind of celebrating this print. And I think this is how it's supposed to be. Over the last 3 to 4 months, we've seen some very good numbers. But we definitely have to also focus on the rates, where they are, what the projections are, what the Federal Reserve is doing, and whether economy itself goes into a recession or not. And at the end of the day, what matters most is earnings. I just want to ask if fundamental analysis course includes guidance about how to set my portfolio percentage stock allocations to merge. It does not. The technical analysis course does go over position sizing, but fundamental analysis doesn't quite. Here, let me think. I gotta think and go back to there's a curriculum page where you can see all the lectures. There's like over 50 plus lectures in each course, so I have to really go back and see. There's also bonus lectures. We have talked about portfolio allocation and stuff, but I'm definitely going to be doing some bonus lectures on that particular topic as well and include it for all the members. So that will also be included. Yeah, low inflation and low unemployment is a definition of a soft landing. That's correct. And if that happens, that will be fantastic for the economy and for the markets as well. And hats off to Jay Powell for pulling it through, because this is, if there was an environment where this was not possible, it's today, where it's so difficult to actually do, because it was just like, if rates are, and we're not at the finish line yet, so we're not done. We're nowhere near done yet, right? So this is just me thinking out loud, that if Jerome Powell pulls it through, hats off to him, all credit to him. But again, we're nowhere near close to the finish line. But considering how high the debt levels are, considering the inversion of the yield curves, considering the manufacturing index has been falling. Last year, we saw 2 consecutive quarters of negative GDP. There's a war, there's COVID, and there's global supply chain issues. Like, if he pulls it off in this environment, it's crazy, because something's bound to break, right? Something's bound to break when rates are this high. And this has been the fastest hike cycle we've ever seen from the Federal Reserve, right? There was this chart that showed us how aggressively the Fed is going higher with rates. And this cycle has literally a parabolic line going up. It's like a vertical line up, as opposed to those cycles that we saw back in 2016, 2018, back in 2000s, back in 07, 08, back in the 1970s. This has been the fastest hike cycle from the Federal Reserve. So, props to him if this ends up avoiding recession and inflation also ends up coming down. It would be crazy. Would be definitely a Federal Reserve case study. Jerome Powell could very well be one of the greatest Fed chairs if he pulls it through. I'm not kidding. If he actually comes out on top of this 1 year from now, he could be like one of the greats in the Federal Reserve history to pull it off. So thoughts on PayPal for Christians. So let's take a look. PayPal already kind of hit the target of $978. So, that right there was that target, but we're now starting to push through even higher. Almost at $80 right now, 78 basis points. So next resistance and targets all the way up to $85. So that's the next target that I have for PayPal. It's kind of like inside this descending triangle, right? So if you take a look at the lower highs and the support that we have over here at $67, this is a descending triangle formation where The stock itself is getting up to its lower high once again. I'm actually going to end this trade. It's over. We do still have a gap to fill over here for PayPal. So that's going to be the one to watch. But resistance all the way up to $85, $86 per share for PayPal moving forward. That's going to be the next target. So Ashley says, assuming the Fed doesn't continue to raise and doesn't hold it for a full year. I think there's a very, very sensitive timeline here, right? I think the Federal Reserve, what they're trying to do is, and you're right, I think if the Federal Reserve keeps rates at a higher level, if they keep raising rates and if they keep them at a higher level, eventually something will break, right? Eventually, like, obviously, if they keep raising rates up to 6%, 6.5%, or even if they keep rates to over 5.5%, eventually there will be problems in the economy. The timeline is that they need inflation to come down faster and sooner than the economy worsens. You know, in other words, they want inflation to be back to the target sooner than the US enters a recession or there is a recession. So that's the timeline that they're dealing with, right? That's a very sensitive timeline because if the economy enters a recession and inflation is still nowhere near close to their target, then there's a dilemma there, right? Which we have talked about on the channel plenty of times, is that's the dual mandate dilemma, where what will the Federal Reserve then focus on? Is it making sure the economy is functioning well and unemployment is low and everybody has jobs, or is it going to be inflation? In my opinion, I think in that scenario, Jerome Powell continues to focus on inflation because he's willing to take that short-term hit in order to avoid that long-term pain. And he's mentioned time and time again is there's going to be some short-term pain because they're raising rates, but a bigger, more concerning problem would be if they don't deal with this now and inflation becomes a much bigger, long-lasting, long-term problem. So that's the sensitive timeline that we're dealing with right now on the macro front, is that they want inflation down sooner and much faster than the economy deteriorates into a recession. Otherwise, there's a big dilemma on our hands. It's not really a dilemma. It's a dilemma for us. We know what the Federal Reserve is going to do, and that is that they're going to straight up not care about jobs or recession. They're just raising rates. So no, TSMC already reported earnings. They were, I think, expected to report pre-market. So they already beat on EPS. They very slightly missed on revenue. So those are some good numbers, and they're already up on earnings. That's what we have on TSMC. They already reported pre-market, I believe. So if we come over to this, so reported mixed earnings report, topping expectations with its Q4 profit. Revenue rose 27% to 19.9 billion, missing estimates by nearly 1 billion. And top line figures rose 2% sequentially. Shares were up 2% pre-market. Earnings was also a beat for TSMC. So why markets made such moves? I would say the market's expectation was actually really high. And that's what I also mentioned in our yesterday's video. So if you come over to our probability numbers here, we actually ended up with the market's expectation, which was, again, there was some mixed messaging yesterday. So there was a little bit of a confusion in terms of what's the actual estimate. CNBC was reporting negative 0.1% as the consensus. Econ Day was reporting 0.0%, investing.com was reporting 0.0%, then Bloomberg was negative 0.1%, but then another report was citing Bloomberg, which was saying 0.0%. So there was a lot of confusion for the consensus there. But bottom line is that we across the board hit our base case. And the reason I say base case is because I take the consensus as the base case, right? So if the consensus already is way too optimistic, that ends up being the base case, right? So you understand what I'm saying? Like today's base case was way too optimistic. So if we hit the base case, the market just did not move at all because we hit the target, right? We hit what we were expecting from inflation. Now, what would have moved the markets a lot if consensus was firmly pegged at 0.0%, or worse yet, we were expected to see an increase of 0.1%, right? So if you were expected to see 0.1% increase and the actual number came in negative 0.1%, in other words, deflation, that would have been huge, right? That would have been a great number, right? That would have resulted in the markets pushing higher, absolutely. But the fact that we were pegged for so high definitely positioned us poorly a little bit going into that report. That's why the markets are flat. We're not moving because we hit the base case. We'll see what happens in about 10 minutes once the market opens. So the markets are bipolar right now. They definitely are. They definitely are. Very, very choppy. And that's the price action that we have seen in most of 2023, right? It's been all over the place. We've seen a lot of back and forth across the board for the last week and a half. And that's true with many stocks, many individual stocks, and of course for the indices as well. So Mara pushing higher apparently because we do have Ethereum almost up to 1,400. Bitcoin's up another 1%, 18,150. So we are once again in that area of resistance for Bitcoin. So we're definitely getting up to that resistance right now. So yeah, definitely nice move for Bitcoin and Ethereum. Mara is up a little bit over 9%. So 587 pre-market. Riot is up. Oh wow, Mara and Riot are pretty much at the same price right now. That's crazy. They're both literally, they closed at the same price yesterday, 537 for both. What are the odds? And then we do have GBTC, that's Grayscale Bitcoin Trust, that's up another 4% pre-market, just trading back above $10 per share. And Coinbase right now is up over 3.2%, so 45.20 is where we're at. So Inmode, let's see. Inmode here has been selling off. So yesterday, pretty brutal sell-off, down over 9.6%. Let's see. So Inmode does report their preliminary numbers. They do that every single time I've traded Inmode before. They always announce preliminary numbers. And what they do is they guide down on their earnings. They'll guide down, and the preliminary numbers they'll guide up. They always do that. It's kind of like the trend for the company. That is what I've seen over the last couple of years. But this time, they said the non-GAAP earnings per share is going to be 74 cents. Expectations were 65 cents. Revenue forecast 132 to 133, 134 million. Expectations were 129 million. For the full year, expecting earnings per share 230 to 239. Analysts were expecting 230. And the company expects revenue of 453, 454. Analysts were expecting 448. For 2023, revenue expected at 525 to 530. I think it might have been the guidance for the next. Oh man, this company is smart. This company is always like this. They always do this. This is so frustrating. Inmode always guides down. That's one thing you have to understand. I've been trading this quite a few times last couple of years that I've been covering this stock. They always guide down lower on those numbers, and then they always guide up prior to the numbers coming out. So just like the Q4 numbers and for the full 2022, you see how every single metric they beat. That's not a coincidence. That's not a coincidence. Like earnings, beat. Revenue, beat. For the full year 2022, they always beat because they always guide down. And I think it might have been because of the guidance for 23 of only 525 to 530 million. That's not a lot of growth. So for 454, let's see, 525 divided by 454, that's a 15% growth, 15.6% growth. That's not a lot of growth. And that could be one of the reasons why the stock is selling off, but that's not the right guidance. That they're definitely downplaying their numbers. They always downplay their numbers every time. All companies should do that. No, I think there's a rule within the SEC that you have to pre-announce your numbers if there is a big material change. I forgot what the percentage is, but there is an SEC law, or I think it's a rule, where if your earnings and your revenue numbers are going to be plus minus X percentage, you have to pre-announce those numbers. That's why Snapchat did that last year a couple times, that took down the entire market with it. But Inmode is kind of like always downplaying those numbers, and they always pre-announce with the good news. So I would not be surprised if in the first quarter when they report earnings in February, or not then, but in these second quarter earnings, they come out and say, oh, we're going to do over $600 million in 2023, right? Or a little bit more than 600 million. That growth rate's going to jump up to 20-25%. The stock's going to absolutely go crazy. And you know, that's usually the time, like that's also when you'll notice the stock has rallied quite a bit prior to the numbers coming out. 76% rally here prior to the actual earnings for Inmode. Of course, this right here was a big valuation compression for the stock, but all of last year, like not last year, but 2021 was just this insane rally for Inmode on the back of downplaying numbers, over delivering, downplaying, over delivering, downplaying. It was kind of like a trend for Inmode to keep doing that. All right, so anyway, we got about 4.5 minutes for the markets to open. Let's see. So what are my hopes and insights for the Fed meeting in February? So I will be doing an analysis on that prior to the numbers coming out, prior to the meeting, of course. But all right, so 66% expecting the markets to be green, 23% red, and about 10% flat at the moment right now. So, but yes, I'll do a video on the Fed meeting, of course, prior to the numbers, prior to the meeting. But I'm expecting, you know, knowing Jerome Powell, I wouldn't be surprised if he goes for a 50 basis point hike in February. 50 would put us at 5%, right? 5%. So my fair value on Inmode was around low 20s. And once they report those numbers here, I will update that fair value, revise it. But it was in the low 20s intrinsic value. So Timothy, why are we not surging since we meet inflation expectations? Well, I think you have your answer in your question. It's because we meet inflation expectations. If we beat inflation expectations, we'd surge. If we miss inflation expectations, we go down. But the fact that we meet inflation expectations is one of the reasons why I think the markets are not rallying. And the reason is because we were overly optimistic, you know, going into this print. It was like expecting picture perfect numbers and the company delivering those picture perfect numbers and the stock still not moving. Why? Because expectations were sky high. And I mentioned this in yesterday's video. I mentioned the expectations are sky high going into this print. So even if you hit those numbers, it's not a lot of movement. But we'll see. We'll see intraday what happens. We got 2.5 minutes. Markets will open. Maybe buyers will step in and we see some momentum intraday. But right now we're just flat. We're not moving at all. This has been a long live stream, folks. I've been here since what? Almost 2 hours? Has it been 2 hours? Yeah. No. No, it's been about an hour and a half. It feels longer though. It feels definitely a lot longer. Get some water. I've also got the green bottle to match the green markets. If I don't have the green mic, at least I have something green. Yeah, looks like the fixings got it right. AR, that's a really good point. I didn't even think about it. You're right. I didn't even think about the fixings right here. We talked about inflation fixings yesterday. I have to really look at what that precise number is, negative 0.13%. But every single month, we can really look at the fixings market, that's interest rate swaps, to understand what that inflation number is going to be. You know, that's they've actually got this right 10 out of 10 times. Can you believe that? The CPI fixing market. Inflation fixings, 10 out of 10 times. They've got that right, which is crazy. But yes, thanks for reminding me. Spencer, you sure that's just water? That is just water. That is only water. But yeah, they got it right, negative 0.1%. Heineken. No, I'm not a huge Heineken fan. I like Hoegaarden. In terms of different beers. So is this still a bear market rally or a real one? I would say still a bear market rally until after we get a breakout above the technical lower highs. This is the lower high that we have to watch out for. So this is, this is still the lower high, and we still have that 200 SMA kind of coming from the top. So right now we're still in the context of a potential bear market rally until the trend actually changes and shifts to the upside, in my view. All right, here we go. We'll see how the markets end up trading today. The QQQ is opening up 0.37% green. I'll turn on the VWAPs here. 279, 280 is going to be that resistance, although we were trading higher pre-market, but then we started selling right back down. So this is where we are for the QQQs. Dow is going to be over here. SPY is 28 basis points. Apple, 26 basis points in the green. Google is up 20 basis points. Tesla is down almost 1%. And Microsoft is up 22 basis points right now. So yeah, the markets are open. Ding, 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 ding. That's my morning bell. Not super great, but I'm still working on it. So yeah, inflation numbers did come out, M&A, 2 hours ago. Actually, about an hour ago, they came out. All right, here we go. Flat open. Flat open. This is the 1 minute chart right now. So why is Amazon so high pre-market? Amazon, if you are trading it, we're literally at our target, 97.19. We are at the target. This is a trade idea that I sent out last weekend, up 2% right now. Everybody, all the members, if you're watching this, I would close this out because we're at our target literally right now. At least have a stop loss in place if you're trading this. So QQQ is more or less flat right now at the moment. We are very, very green. Well, not really green. We are actually a lot red too for a lot of stocks. And among big tech, Tesla is the only one that's down. Amazon, 1.7%, AMD, Nvidia, Netflix, Meta, all of them are up, green so far, but we'll see if they actually hold up today. M&A, you would sell a covered call on Amazon then? Really depends. If you are trading this, no, I would just take profits and be out. If you are investing over the long term and your cost basis is close enough, then yes, you can think about selling a covered call to hedge a potential pullback on Amazon. Or what you can also do is you can actually create a zero cost collar. If you are looking to protect your gains, if you're already up on the stock as well, you can also look at creating a zero cost collar, which is basically selling a covered call and then at the same time buying a put. And the premium that you generate from selling a call will finance the buying of that put. So you're protecting your downside, and at the same time, you're basically buying insurance on that stock. That's what you're doing. I have a whole video on doing that. So, okay, cost base is around 105. So, okay, 105, so you're not in the green. Then yeah, selling covered call would be a simple hedge if your plan is to hold for the long term. And again, one of the things with selling covered calls is that you are comfortable with getting rid of your shares at that strike price. So if you're not comfortable, if you sell a 110 covered call on Amazon, for example, if you're not comfortable letting go of your Amazon shares at 110, don't sell a covered call at that strike. But again, the farther you go out of the money, the lower the premiums will be. So you have to keep that in mind. There's always a give and take when you're trading options. So I think 110 only if you're comfortable with that price and letting go of your shares. So QQQ down flat here, literally no move. What a day. If you kind of told someone that today was CPI, nobody would believe you because the markets are literally flat. They're not moving at all. Nasdaq's only 0.1% down. S&P's down. Wow, look at that. 0%. We got the Dow. 0.02%. What a day. It's like the market's trying to really figure out where do we want to go. Somebody shared a very, very interesting picture in our Discord. Super funny. Where both the bulls and the bears are just sitting at a table waiting for the CPI numbers. I saw that. I saw that earlier. Oh, it's so funny. Let me see if I can bring that up. There we go. Starting to sell off even more. That's the picture right there. That's the state of the market, where we're just like waiting. But the market's not doing anything right now. Okay, some momentum coming in. Looks like Tesla really driving us lower. Microsoft almost starting to push higher above its middle VWAP. We'll see if we actually get a breakout, but Google's struggling, Tesla's struggling, Apple's struggling. So we're definitely making lower highs and lower lows here. No green candles in sight for Tesla or Google right now. Tesla's down 2.5% right now. Wow, that really escalated quickly here. And then Netflix also turned red. Google finally a green candle coming in. So we'll see if we actually get a breakout above 277.81. It's the middle VWAP here. If Google, Apple breaks out, there is possibility that we see some more upside intraday at least. But Tesla, man, Tesla's so weak. What's going on? Down 2.5% here. And here goes Microsoft and Google. Amazon, wow, Amazon, look at that. Look at that rejection on Amazon. Oof. It was literally a split second, right? It was just like 6 minutes into the open, hit $97, and now starting to sell right back down. Absolutely crazy, the amount of momentum we're seeing to the downside here. But QQQs, I think the next long opportunity will give us at 275. So if you come down to 275, that's like another 0.5% move to the downside. I'll be very interested in taking a day trade here with a very tight stop under 275 with the potential upside of at least 1% on the Qs. Apple is the only one that's kind of holding up right now, going sideways. Tesla making new low of day, Google making new low of day, Microsoft making new low of day. That's actually a bit of a hard sentence to say. Google making a new low of day. So, Caddy, thanks for pointing out Amazon. I sold, profit taken, now waiting. Yes, that's good. Congratulations. It was hitting our target. There's no point in being greedy. Take your profits and then move on. That's one thing that trading-wise, we got to really move on. And I have to practice that myself. I get too hung up on selling too early or taking profits too early and stuff like that. Something that I definitely need to practice there. All right, so Apple, first one to break out of its middle VWAP. Let's see if we can actually break out of its high of day, sitting at 134. That should spur some momentum. Yeah, Meta's the only one that's actually maintaining right now. That's the only stock that's green along with Microsoft. Microsoft, the second one to break above its middle VWAP. And let's see if Google and Tesla have some strength, some momentum. Because QQQs are definitely fighting, trying to break outside, but there's also a lot less volume than I had hoped for on the Qs. So a lot of the names here are selling off. Intraday, of course, we're seeing a lot of momentum downside. Mara was up like 10%. Now it's only green 4 or 5% right now. Zim integrated shipping, somebody was asking about them earlier. 1750 is where we're at. All right, now we're starting to see a little bit of upside. So I'm going to end the live stream a little bit earlier today, folks. I've been here for pretty much a long time covering the inflation numbers. So thank you so much for tuning in. I really, really appreciate it. Make sure that you drop a like. Regardless of whether you're a bull or a bear, make sure that you'll drop a like, subscribe to the channel. Subscribe and hit that notification bell so you don't miss out on any of the future live streams either. Market's very, very flat right now. We're not seeing a lot of momentum, but we'll see if intraday a lot of these names start to reverse back higher. QQQ's also got 277.50 to break out of. That's the middle VWAP. At least the first sign of potential upside. We'll see if that happens, but Tesla really struggling right now. But once again, thank you so much. Really appreciate it. Links down below if you're interested in joining us for our Discord and our Patreon. A lot of our trade ideas are shared as private videos on our Patreon. I do them weekly. So you'll get swing trade ideas, of course, a lot of day trading alerts and options alerts as well. So thanks again. Happy investing. Hope you all have a great day. I'll be live tomorrow once again. And it's a long weekend coming up, right? So you guys reminded me that MLK, it's going to be a longer weekend. So hope you all have a great weekend as well.